We're going down. We're going down. So this week, the Jerome Powell Fed announced that rate hikes, at least for 2019, probably longer than that, are over. And QT, which just means balance sheet reduction, is over. And as I talked about on previous live streams shows recently, that there's at least 5 or 6 Federal Reserve Board of Governor members who are already talking incessantly about the QE program and expanding the balance sheet. By the way, this is during supposedly, and I'm quoting here Donald Trump, the greatest recovery ever, the greatest economy ever. So we have the Fed absolutely panicking here. Donald Trump is still trying to pump the stock market, saying how good the economic data is. But the global economic data, as I'm going to talk about now with this global macro summary, is saying that things in the rest of the global economy is really, really bad, and it's actually getting a lot worse. So we've had really bad numbers for a while now, and they keep getting worse, from the Baltic Dry Shipping Index, the South Korean Shipping Container Index, the Taiwan Shipping Index, and even recently we got a really bad data point from the South Korean chip exports. That's the semiconductor chip exports. And so those collapsed 25%, and this is the lowest number since 2009. And I also have an additional article if you want to take a look at this. This is from CNBC, and the article talks about how executives at FedEx, BMW, and UBS and others are describing bleak macroeconomic conditions which they say are weighing on business. So the head of UBS said it was, quote, one of the worst first quarter environments in recent history, end quote, while FedEx cites slowing international conditions and weaker global trade growth trends. And so Fitch Ratings, and you guys all know what I think about the ratings agencies. I think for the most part they're slow and lazy and inept and or corrupt. And Fitch Ratings also, quote, aggressively cut its 2019 global forecast this week, but the firm's economics team stopped short of calling a global recession. Yeah, because they probably don't want to get sued or get threatening phone calls or emails or something. Okay, so this article goes more in depth than just the headline stuff I talked about. Let me see here. Samsung also gave a warning. Just skimming through it here real quick for you guys. Yeah, there's CEO of Adidas, and there's others in the article. So I'll attach it if you actually want to take a look and read it. But the bottom line is that the real economy, not Donald Trump's economy, the real economy, the real global economy is not doing well. China's not doing well. A lot of countries in Asia are not doing well. The European Union is definitely not doing well. And the global economy is connected. So maybe some of these businesses that maybe if they just sell to a U.S. consumer can continue to do okay for a while. But what we're also seeing, and I talked about this as well in past live stream shows, is that the credit card debt for the U.S. consumer is sky high. It's over $800 billion. It has exploded in the last 6 to 8 months. And so that fits in with my stagflating lie thesis, how the costs of everything are going up, taxes are going up, and people, to try to make ends meet and they want to maintain their standard of living, they're putting it on the credit card, which is very, very dangerous. And on top of this, we also have, like I said, in the last month or so, we got the data out, and this was from the Federal Reserve. While Donald Trump was pumping the economy, that the delayed payments, there were 7 million auto loan payments 3 months or more behind, which is, basically from the people who were in the auto industry commenting below that live stream, that's basically a death sentence for a person's credit rating, and it destroys your credit history. You're basically done. And, in the auto industry, it's really, really bad. It's good for, I guess, for the repo men. I guess they can make some money off of that. Hey, Charles, I'm glad you like the cartoon. Okay, I don't see all of your guys. If a lot of people comment in the live stream, someone said, well, you don't answer my questions or comments. Well, first of all, if you donate on Super Chat, I'm more likely to notice. But if a lot of people send in questions and comments at the same time, it just floods the live chat gets flooded and I only see one or two comments, it's very, very slow. So if they're coming in, a lot of people, dozens of people are commenting at the same time, I don't see them all, okay? Just telling you how this software works. It's not perfect. So don't say, Jason, you're a moron, or Jason, you're a coward for ignoring my questions. That's not. In a lot of cases, if a lot of questions are in, I don't see it. Okay, let me check my notes here. So the Powell Fed, it's... Some people, this was even more dovish than a lot of people expected, and the dollar index actually dropped at one point below, it crashed briefly, below the 200, its 200-day moving average, but it has rallied since, because I think people, after the Fed news, within like 24, 48 hours, have started to realize that yes, the Fed is being dovish now. Yes, they want a weaker dollar. Yes, they're worried about the corporate bond market and consumers here in the US, and they don't want to raise interest rates anymore. They don't want to reduce their balance sheet, but Europe is worse on a relative basis. These things are relative. So a lot of my audience, you know, you're in the gold community, you're in the dollar crash community, you're in the alternative media community, and things, the market, professional money managers look at things on a relative basis. So if there's, you know, riots in the streets every day, the yellow vest protests in France, and things are getting worse in the European Union, then that gets taken into account by a lot of professional money managers, and also these stupid high frequency trading algorithms, which are getting a lot of people like me fired from jobs. So these stupid trading algorithm machines that just scan headlines and scan Twitter and manage many billions of dollars now, and they're firing human beings, and they create a bunch of extra market manipulation both up and down, and a lot of volatility both up and down that's unnecessary. These stupid things scan those headlines on Twitter and elsewhere and read these things. Okay. Let me check my notes here. Yeah, so Donald Trump, you know, he's just totally lying at this point. That the greatest economy ever. And I have some good quotes from some of my friends here I follow on Twitter. Let me read you some quotes here because I think these are important. So Michael Leibowitz, friend of the show, chartered financial analyst, writes good articles that often appear on Zero Hedge and elsewhere. 10 years into economic expansion, unemployment near 50-year lows. We all know that that's bullshit too, unless you count like part-time jobs that people have or people with multiple part-time jobs. Rates still near historic lows, Fed balance sheet 4 times normal, and the Fed thinks we need stimulus. Yep. Another good one, how long can an economy based on consumption driven by consumers with no savings spending high interest credit on things they don't need, which are produced overseas, last? It's a good question. Can last maybe as long as the banks, the economic and political elites want to change the rules, and the central banks want to change the rules. So funny how many trashed Michael Leibowitz's earlier tweet about the ECB buying stocks and called it absurd. Is that absurd knowing that the Japanese and Swiss banks are already doing it? And, you know, this is, most people initially said it was a conspiracy theory that these central banks would coordinate. It was a conspiracy theory that these central banks would buy stocks. And yet, you know what? We've seen these central banks, whether it's the Swiss central bank, the Bank of Japan buying stock market ETFs. The European Central Bank has not bought stocks yet, to my knowledge. They are working behind the scenes, you know, on doing things for the banks there. They've been doing this for a while, but they have not gone into the market yet. They've been buying corporate bonds, a bunch of them. Trillions of dollars worth. So, you know, the rules can change. This is my point. I've been saying this for a very long time, for years. That rule number 1 is that things are so bad in the real economy that the people in power, the economic and political elites, the central bankers and bureaucrats and all these guys will change the rules. Because that's really all that's left. They can paper things over, but then if they paper things over too much too quickly, it starts to accelerate, inflationary expectations increase, velocity of money increases, then you start to get either really bad stagflation accelerating or hyperinflation. And so they're trying their best to do what Jim Sinclair calls MOPE, Management of Prospective Economics. Joe Loves History wants me to talk about the yield curve. Well, over 50% of the yield curve is now inverted. It's not a whole bunch more to talk about. A lot of other countries, especially European ones, have negative yielding bonds because of financial repression and manipulation by the European Central Bank. So there was, I think at one point, like $11 trillion worth of corporate and sovereign bonds that were negative yielding, even with a government inflation rate. And so I think that's now down to around 9 trillion. But there's still about 18 countries, most of them in Europe, that have that problem. And this is basically the Japanization of everything. So Ben Bernanke talked about how we're going to do everything we can, during the 2008 financial crisis, and he wrote academic papers how the U.S. can avoid being Japan. And guess what? Almost all the central banks, all the major ones, are all following essentially the Japan playbook. Okay, where the Japanese central bank, the Bank of Japan, owns most of, except for one or two large pension funds, owns most of the Japanese government bonds, and the Bank of Japan is even buying Japanese stock ETFs. I think they own around 70% of the Japanese stock ETFs. So they've changed the rules. They bought that, and according to the Japanese inflation data, there is no inflation in Japan. But if you're a tourist, go to Japan. Go to Tokyo or some of those other cities. It is very, very expensive. It is very, very expensive to live there for a lot of different things, whether it's rent and food and all these other things, especially as a tourist. Okay, so something else I wanted to bring up that I think is actually very important is that I was looking at a blog article from, he's a hedge fund and institutional bank analyst, Christopher Whalen, and he was looking through recently released Federal Reserve minutes, and he quoted an investment bank research report, I think from Goldman Sachs, and the Fed was also talking, the article is in the Wall Street for Main Street Facebook group, but I'll also put a link to it in the information section of this show after the show's over. And if I could just summarize it really quick, basically the Fed is already worried about the repo market, the over-the-counter derivatives market, and the collateral going bad and margin calls. And so the Fed is already talking in the Fed minutes, the Powell Fed is recently, about nationalizing the money markets again and creating basically a new bailout facility that, by the way, Congress, I don't know if they would fully understand it. The American people, most of them would not fully understand any of this. That a bailout facility that just deals with the repo market, the money market funds, and some over-the-counter derivatives. Romaro Gudapati. Is the U.S. heading for negative yields? Well, the academics, the Keynesian academic economists, the people with the PhDs want that, and they've actually written research reports saying that the U.S. economy would have recovered faster with negative yields, but go talk to people in Europe and ask them if that really worked. Okay, so there's theory, and then there's practice and reality, and what actually works in reality and practice versus theory. And this is the problem when you have so many either academic economists or government economists, or even the investment banks hire a lot of these wonky academics too in a lot of cases, although there's some exceptions to this, but most of them are still wonky and use almost the exact same models as people at the Federal Reserve and academic Keynesians, is that they do not get fired. They do not get any disincentive for making bad market calls. So they can make mistake after mistake after mistake after mistake, and their jobs are not on the line. They just say, oh, well, I tried. So you have and some of these guys, if they're in academia or at the Federal Reserve and they're there long enough on tenure, they may even get promotions. So you have these academics with so much power, especially people inside the Fed, and they're not held accountable at all for any of their mistakes. Kirsten is exactly right. They will never admit to recession until we're well into it. Yep. So the Bureau of some of these, like ECRI, the Economic Cycle Research Institute, and some of these other organizations that have former academics there, they normally don't admit a recession. Even during the 2008 financial crisis, they only did it ex post facto. And then they go back and look and say, oh, we should have noticed this in either late 2007 or early 2008. But they did that in like 2010. So they always go back afterwards. But if at the time, it doesn't help you. So they always do this. But the bottom line is that these academic PhD economists, whether they're working in the central bank or working for the federal government or many of the different government agencies or in academia, a lot of them are grossly overpaid and they provide no value whatsoever. They actually hurt the real economy and they actually lead to really dangerous consequences, unintended and dangerous consequences down the line, because this goes to what F.A. Hayek said, the pretense of knowledge. And he was talking about the overeducated academic who thinks he knows all these things in spite of like the track record. So look at the best example of this is Larry Summers, not Brendan Bernanke or Janet Yellen. The best example of this is Larry Summers. The guy's the president of Harvard. There's people on Twitter who work in the mainstream financial media, like pretty financial journalists who say that Larry Summers is the smartest guy I've ever met. You know, all this stuff. And okay, he may be book smart, but the guy's track record is one of the worst you've ever seen or heard of. Go back and read his writings and his predictions. I mean, he's like, over the last like 20, 30 years, he's like 0 for 100. And yet, you know, he's the stereotype for the Peter principle. He fails forward. So every time he comes up with just a really horrible prediction or like a policy suggestion, he gets some type of promotion. The man is just like an evil genius. I don't know, once you're the once you're the president of Harvard University, I don't know what other kind of Peter Principle promotion you can get. Say that 3 times fast. Peter Principle promotion. Peter Principle promotion. Peter Principle promotion. I'm trying to be a little silly today and inject a little bit more humor into all this negative information, in case you guys didn't figure that out. So I don't think there would be a fight here. There would be a fight here with negative rates, with going with punitive, artificially implemented manipulation negative rates, because basically the ECB, European Central Bank, has trapped itself to where their banks are in even worse trouble now, or they're going to destroy their currency, like very, very quickly. And I talked about this in the last week or two. I quoted Peter Bookvar, who said basically the European Central Bank is in an even worse position than the Federal Reserve is right now, because the European Central Bank grew their balance sheet way too quickly. And now the European Central Bank was also implementing, not only have they basically monetized all the corporate bond market, so there is no demand for European sovereign bonds, especially at those yields. There is no demand for the majority of corporate debt in Europe, especially at those yields. So basically their bond market will blow up or their currency will crash even further. And like I said, back to the relative argument, right? So the U.S. has a lot of problems. Long term, the U.S. is being given more rope to hang itself with. The U.S. has an immense amount of problems. Europe, remember, I've talked about all these different economic landmines. But the bottom line is market participants, especially professional money managers, are weighing these things, and they say that at least in the short term for the next couple of years, the worst problems are in the European Union compared to the U.S. And that's why the dollar index did not fall further, at least yet. Why the dollar index did not fall further, because the dollar index is still mostly made up of the euro versus the dollar. There's obviously other currencies in the basket, but it's mostly dollar-euro. I'm just checking my notes, guys. I'm not looking through the live chat comments yet. I'm making sure I cover the things I want to cover. So I want to talk about some professional money managers and their hypocrisy. Also, I'll talk about Jim Cramer too. And okay, so if you're not familiar with Barry Ritholtz, first of all, let me say he's an extremely smart guy. And I used to follow his work a lot when I first woke up, like in 2007, 8, and 9. And by like 2010 and 11, as he was becoming more and more popular, his blog was becoming popular. He released a book called Bailout Nation, which has pretty good reviews. And then all of a sudden, he just started getting on financial TV all the time. He started getting all these promotions. He was initially a pretty low-level guy in the financial industry. I think he was like a pretty low-level sell-side analyst. He was maybe like a trader on the side on his own. He was not a big shot. And within about 5 or 6 years, because of the book and some of the other stuff he did, he just got noticed because he was on TV a lot and his blog became popular, criticizing certain things about the bailouts and other stuff. And then he became a big shot money manager. And then the funny thing is he was going to all of these Agora financial conferences about 10 years ago. The last 10 or 15 years, about 10 or 15 years ago, he was going to a lot of Agora financial conferences and, criticizing the government, criticizing the banks, talking about how gold was a good idea and things like that. And then all of a sudden, once he became popular and was on CNBC all the time and got his promotion to managing billions of dollars, so he had a really high-paying, cushy job, he just stopped all that. And he just went into like normal, mainstream, hardcore Democrat, champagne socialist stuff. And so the reason I bring him up is, number one, I don't like people like that change their tunes that crazy. And he did like a 180 on a lot of his views. But number two, also, that I think the system is perverted to where once you get to the top and get a lot of money, you are pressured to switch. So if you were like counterculture and you were a small government libertarian and you were criticizing like the banks or the corporations or the both political parties or just the big government in general, and then all of a sudden you become rich and famous, then you start getting harassed by the people around you telling you, shh, hey buddy, you can't say that stuff anymore. Why don't you shut up? You'll get an advertising deal. So I think it's just funny that, he was initially, I liked a lot of the stuff that he was saying when I first woke up 10 years ago, and that now like his tone is totally different. And Barry Ritholtz now is actually saying that the stock market is going to go a lot higher. And he's saying there's no reason to be bearish on the stock market. So he's like a perma bull now. But he's got that long only bias that Christopher Irons in QTR talks about so much, quote the Raven podcast, which is excellent, that he talks about with the mainstream financial media. There's a lot of money managers on Wall Street, and I think it's because that Barry Ritholtz, he's not at a long-short hedge fund, so he can't have balanced positions with longs and shorts, and he can't hedge his positions. I think he's a long-only fund manager, so most people aren't aware of this, that when he gives, and the guy has a law degree, so he's worked in law, he got a law degree. I don't know if he practiced law, but he got a law degree, and then he worked in finance for a long time, and he knows how to argue, both sides, bull and bear. There's a lot of people on Wall Street like this, like Jim Cramer. Jim Cramer has a Harvard law degree. He's not a moron. He may have no morals. He may be corrupt and morally bankrupt, but he's not a moron. And so you have to be careful about who you listen to. First of all, everyone has bias, but some people have it worse than others, and some people you have to find out what their incentives are. So if you're a long-only money manager and you're managing many billions of dollars and your multi-million-dollar salary per year and your bonuses and all these other things are contingent upon a certain amount of money staying under your asset management control and your fees and stocks going up so you can make profitable long-only trades, then that's probably, unless there's very few exceptions to this, that's probably what your bias is going to be. And so now in the mainstream financial media, and this is very unusual, just in the last week or two, we've seen kind of a change now towards Elon Musk and Tesla Motors. So Jim Cramer, who has been pumping, he's been kissing Elon Musk's butt and pumping the stock for years, which is funny because some of the people that interview Cramer, because he's on throughout the day on CNBC, and they're talking about, you haven't been bullish on the stock in a long time, which is a lie. And but that's the spin because most people don't pay attention to it and don't go back and fact check on these things. But now Cramer is finally even turning on Elon Musk and Tesla Motors. We have, let me check this story again here. We have the Electrek blog, which was a big Tesla bull. A lot of people think that this guy was getting enormous commissions on his website from Tesla's referral program. So, but all of a sudden, earlier this week, on Monday and Tuesday, he started to heavily criticize Tesla. And then on top of that, I think the other major Tesla YouTube channel, there's a number of Tesla pumper YouTube channels now too, including an internet marketer guy that was pumping all these initial coin offerings, all these altcoins, telling people could get rich quick. He has over 200,000 subscribers on his channel. And he switched over from pumping crypto, ICOs and altcoins to pumping Tesla. And I watched one of his videos a couple months ago, and he was saying how basically you could put $30,000 into Tesla, and he thinks it's going to turn into $300,000 in just the next couple years. You know, just a ridiculous prediction. He's citing these stupid stock analysts that still have a multi-$1,000 price target on Tesla shares. And some of these guys, one of these YouTube channels, Hyperchange, is even criticizing Tesla now too. And that guy basically worked in the Tesla Motors PR department. Or if he didn't work, he should have. Because he gave the best long bullish thesis. I think his name was Galileo. Wendell's funny. Elon Musk, Enron Musk escaping to Mars soon. You know, I mentioned this. I mentioned this suggestion last week or the week before on a live stream show. I'm thinking he should try to date Alexandra Ocasio-Cortez. I'm thinking he should slide into her direct messages on Twitter and say what's up. Get some bailout money in the Green New Deal. Because, you know, they're trying to jam all this crap down our throats, whether it's universal basic income, free college education, free health care, you know, Green New Deal, all these different things. And if they keep repeating these things, eventually enough college students who are brainwashed will believe them. And these Democrats are talking about, like Nancy Pelosi wants to lower the voting age down to 16. I mean, when you were 16 years old, do you think it was good? It would have been good if you were voting? I think that would have been a mistake for me personally. I think the only thing at age 16, there were only a handful of things I cared about when I was that age. I cared about like sports, like baseball and football, playing sports, playing video games, eating good food, and chasing girls. So that's really all I cared about at age 16. Oh, and I was learning how to drive, which was not with the learner's permit and stuff. So when I was 16 years old, I was not responsible enough to vote. These Democrats, man, all the crazy stuff. I actually I want to summarize all the stuff that the Democrats are trying to shove down our throat. I have to read this from a tweet. This is pretty nuts about all this stuff here. Let me pull it up. Some of you guys won't like the pause here. Okay, here we go. Prominent Democrats have now endorsed this is recently, packing the Supreme Court, which is what FDR tried, which is extremely unconstitutional. But I am in favor of term limits on Supreme Court justices, but which is what Cory Booker has suggested. But we need term limits, more importantly, on both houses of Congress. There needs these career scumbag politicians that get rich quick in Congress needs to end. We need term limits in Congress as well. Okay, changing the voting age to 16, I already brought that up. That's 2. 3, abolishing the Electoral College. The Electoral College is meant to protect the Midwest and the small states. So it's not tyranny by New York or Boston or LA or San Francisco or Chicago or Washington, D.C., although there is tyranny by Washington, D.C., and there is a lot of tyranny by Wall Street. But the Electoral College was meant to check this in the voting process, at least. So basically, 5 cities wouldn't determine the whole election. And I think it was a smart idea. But now, if enough brainwashed people or enough desperate people are promised enough things, as I talked about in my Eat the Rich video, they may eventually change their minds and vote for this crap. You know where I think things are heading? Did you ever see the Disney Pixar movie Wall-E, where it was the robot and he was the robot in charge of like compacting this recycled trash and stacking it in boxes, and the only humans that were left alive were these like morbidly obese, diabetic men, women, and children, that they were so out of shape. They had like these recliners that could like hover, and they had video screens constantly, and they were taking carbs and sugar and all this stuff. I think, unfortunately, that's where a lot of Americans are headed. We have New Zealand and Australia blocking zero hedge now after the stuff with the shooter, which is an enormous overreaction. These are nanny states already. They've was it New Zealand? New Zealand already has been trying to put in a gun ban. And there's, I think, over 1 million people who are legally registered gun owners in New Zealand, so I don't know what type of scheme or program or fiat decree that they're going to try to get rid of them. But you know, from some of my listeners who live in Australia and New Zealand, it sounds like there's a lot of brainwashed people there who are going to go for this garbage. It's really sad. Hello, RR. I agree. Sugar and carbs will kill you. Unfortunately, I tried to tell my dad this, and my dad, who is a retired doctor, but he was not taught nutrition in medical school, my dad has diabetes now. I've been giving him lectures for years on cutting back on sugar and carbs, and he did not listen. He was pre-diabetic for a long time, and I told him, look, you're going to have to make some very difficult lifestyle changes. You're going to have to eat lean meat and more vegetables, more protein, lean protein and vegetables, green vegetables, and he did not want to hear it. He likes having his normal bowls of cereal and like those fruit cup things that may or may not add sugar and the fruit concentrate stuff, and his Fig Newtons and this other processed food garbage snacks. Okay, I'm glad that Zero Hedge is now back in Australia. Yes, Zero Hedge was out for about 48 hours here in the US too. So we did a campaign online and we worked to get it back. Some of my friends were pushing that stuff out on Twitter. So I'm glad that, but that doesn't mean they won't try again. You know, we are in a very, very, very totalitarian world. And just because we have the internet and social media does not mean we are free. In fact, it's quite the opposite now. From what I'm hearing, that a lot of employers have, if you're looking for a job and stuff, they can go through all your search history, not search history, they can go through your posts on social media and look things up. So if there's really bad things on there, it may cost you a job or a promotion. Meanwhile, we have all these dumb idiot males that are sending penis pictures still. I'm not one of them. I've never done that, but there are a bunch of them that still do. So let me take a look at some of the economic data real quick. So the dollar index is at 96.39. The VIX is still down at 1363, so the VIX has not rallied yet. Gold has rallied a little bit. It's over 1300. Silver's over 15. I would watch the dollar index though, but the bottom line is that as long as the euro, all these problems are in the European Union, that the dollar index will probably, on a relative basis, still remain strong. There has to be dramatic improvement in the European Union for the dollar probably to sink a lot. It may go down in the range, but I don't see that the dollar rally is over yet. It did fall below briefly its 200-day moving average, but we're going to have to see what happens over the next couple weeks and months before I say that the dollar rally is over. Greg, I agree the VIX is definitely suppressed. It's actually the leverage short volatility trade. It's actually, not only is it manipulated, it's also part of a trade to collect extra premium. So people sell basically naked calls. Is it naked calls? Yeah. Yeah, so they sell naked calls on the VIX, betting that the VIX will stay low, and that they can collect the premium and the VIX won't rise. And if you saw the interview about a year or two ago from Grant Williams and Raoul Powell from Real Vision TV, they were talking about how the same leverage short volatility trade on the VIX has spread to a bunch of other markets, including like options on commodities and currencies and other things as well. Okay, checking my notes, making sure I covered everything that I wanted to cover. Oh, we also have a record amount of initial public offerings from Silicon Valley coming. Lyft, Levi's, Levi's is actually from the San Francisco area. If you're not familiar with it, Levi's jeans was started during the California gold rush. So it was like the very first actually picks and shovels company, where they sold jeans to the gold miners. So they were meant to keep the gold miners warm, and instead of betting on finding gold, the guy Levi Strauss, he made the jeans and sold them to the gold miners, and he got rich, whereas most of the gold miners lost all their money. Although Levi's now is not really adapting to the change in women's fashion, because a lot of women are not really wearing jeans as much anymore. They're wearing these yoga pants and leggings and Lululemon stuff. They're wearing it out in public. So I would expect Levi, that's probably why the venture capitalists and private equity guys are dumping Levi's. But normally a excessive amount of private companies hitting the public exchanges, like a quick dump, doesn't guarantee it, but it could be a sign of a stock market top. But if these central banks are going to keep changing the rules and intervening and doing more QE, then it might not. But in the past, when the rules were different, when the central banks did less intervention, when a bunch of companies were being dumped by the angel investors and the venture capitalists and the private equity guys back onto the public markets, that normally signaled a stock market top. But nowadays, with the rules changes and the increased amount of central bank intervention and intervention by governments and treasury departments and plunge protection teams, I'm not so sure. So I was hoping that I could maybe get an interview with Kyle Bass. I reached out to one of his people, and the Chinese have had an enormous stock market rally in 2019. It's rallied around 20%. It was up to 25% at one point. I wanted to ask Kyle Bass if he thinks that the Chinese stock market is already pricing in an RMB devaluation. Because there could be a bunch of like middle class or upper middle class or wealthy Chinese people who they can't get all of their money out of the country at once. They can't launder it all out, or they can't put it all into rare gemstones or Bitcoin or precious metals at once. And so they may have parked some of it in Chinese stocks as a short-term inflation hedge. But like I explained on the last live stream show, the worse the inflation rate gets, the worse and interest rates rise, the worse the stock market performs historically. Like on a percentage basis, some of the highest performing stock markets ever have been like in the Weimar Republic, Germany, and Zimbabwe and Venezuela, but that's just in nominal terms. So those stock markets rose very, very high on a percentage basis, but in real terms, the currency crashed. So you didn't get any real gains. You didn't gain any real wealth from the stock market appreciating like that, because the purchasing power of your currency was destroyed in those instances. Okay, well, I think I'm done with all the stuff here in my notes, so I could take a look at listener questions and comments now. Yep, looks like everything's I covered. I even talked about Kramer the Clown again. That's always fun talking about him. And it's interesting with Elon Musk and Tesla Motors how people that were pumping the company are now like starting to criticize it. And they're talking about how Tesla Motors has a cash crunch. Tesla Motors is having production problems. You know, these are things that the Tesla bears have been bringing up for a while now. And Jim Cramer even said that Elon Musk is really doing a bad job of complying with the judge's orders, that the SEC did for a settlement. And on top of that, Jim Cramer actually criticized the Tesla board of directors, and everyone has known for years that the Tesla board of directors is a bunch of yes men, and he controls them, including his own brother, or is it cousins, Kimball Musk? Can't remember how he's related, if it's a brother or cousin. It doesn't really matter because he's still a puppet of Elon Musk. Hey Charles, I'm glad you like the economic cartoon. So we'll see what happens to the yields. I wonder what Jeff Gundlach's position is now, because he thought before the Fed announcement, for the last 2 months prior to this Fed announcement, that the yield curve would actually steepen. And now the yield curve has started to go over 50% inverted. So I would be curious to hear what Jeff Gundlach has to say now. Now, he still thinks that the stock market is in a bear market, but if the Fed is going to inject more QE, more quantitative easing, more money printing and credit, you could see the stock market become more and more divorced from reality. And despite some of those really bad global economic data and fundamentals of the real economy, you could see the asset prices become even more divorced from the real economic data and the global economic data and the US economic data. So we'll have to see how things play out. But I think this has to do a lot in why Trump is pumping the stock market. He believes in the wealth effect, too, that people will spend if the stocks stay high, but also because of the tax receipts from capital gains. Because like I've said for a long time now, most people, when they sell a stock, a bond, or real estate, only make money on the long side. Now, obviously, professional money managers can be hedged or sell something short or do a trade with something inverse or something like that. Obviously, this is not financial advice, but avoid those double and triple leveraged ETFs unless you are a financial professional. Most of the time, people lose a lot of money in those. Those are mostly meant for day traders. And the majority of people I know that have used these things have lost tons of money. Excuse me. I probably need some water. My voice got a little hoarse there. Joe Loves History asks, how long are we until we reach the yield curve inversions of 2008? It's too early to tell. It's too early to tell. And like I said, it's all about which country will collapse first now. So most experts admit that the global economy has enormous problems, and some of them are still bullish on stocks in spite of that. But most people admit that either emerging markets or China or Japan or the European Union will eventually collapse or have like some type of restructuring or bankruptcy or something along those lines. And it's all about the order of these things. And if the U.S. is going to be saved for last, the U.S. is going to be allowed to change the rules and do a bunch of really crazy things that almost no one thought was possible. We're in the theater of the absurd, and things are just getting crazier and crazier. It's like Black Mirror. I'm not a bond expert, so I really don't want to talk about all these bond questions. I should probably try to interview someone who has more bond expertise than me. I'm more of a global macro and fundamental equity research guy. So I just dabble in bonds and I read the research from the people like Jeff Gundlach and others. So I'm not claiming to be the world's best bond expert. But I think what they will try to get to happen is that they will try to get pension funds to voluntarily buy more of these treasuries for quote-unquote national security or some other bullshit excuse. Maybe Trump sells it that we need maybe an infrastructure bond or something. Or he says, oh, we need to upgrade our military more. And then he lays out some type of plan. Or Trump lays out a plan because the Democrats won't help him on an infrastructure bill because they don't want to help him for any type of win. And he says, he goes to the pension funds and he says, we're selling infrastructure bonds at a slightly higher interest rate. And if you give us $2 trillion, we'll be able to fund our infrastructure plan, some of it here in the U.S. I mean, I'm really frustrated with how bad the U.S. is at executing quality infrastructure. Okay, the U.S. in California, many billions of dollars have been wasted trying to build a maglev or bullet train from San Diego to San Francisco. Okay, we can't even do that right. We can't. A lot of money and time was also wasted trying to build the bullet train, I think, from Anaheim, California, which is around where I grew up, right near Angel Stadium there in the parking lot to Las Vegas. I mean, they've been talking about that for decades. I think they actually did make some progress, but I think that might be stalled now too. So, I mean, and then the other plan proposal I heard was a Japanese company, and we should have taken them up on their offer, because they offered to finance this at a very low interest rate, because this Japanese infrastructure and construction company wanted to prove that they could build a really good maglev or bullet train in the United States. They wanted proof of concept, and they were willing to offer it almost at cost, basically. And it was from Washington, D.C. to Baltimore. And this was like 5 or 6 years ago. And guess what? Because the U.S. is so corrupt and inept and can't do, at this point, both politicians can't really do much of anything right in Congress and at the state and local level, that they basically told the Japanese construction company to go fly a kite, because they said, we're only going to allow an American company to do it. So even if the Japanese company has a far better track record, can offer a far better deal on doing it, and they have, over a decade of experience building these things, basically they said, go pound sand, even though it was a really good deal, and now it's probably not going to get done. Might never get done at the pace this is on. So I would love to see, this would help a lot of the traffic and other problems, but the dream of the Democrats with Alexandria Ocasio-Cortez and all these trains, we can't even do one bullet train, one maglev train from San Diego to L.A. or L.A. to San Francisco. So how are we going to put them across the whole country? It's totally unrealistic. So's the amount of money that they want to spend. The U.S. used to be better and more efficient and used to have a better attitude at getting things done. There's just too much bureaucracy and corruption in Congress and unbidded contracts. There's so many unbidded contracts, whether it's for freeway tunnels with the Big Dig in Boston that had enormous delays and cost overruns. And, there was the metro here that went through different parts of Northern Virginia. And I think that was an unbidded contract too. And that was delayed as well. These things need to get fixed. There needs to be a competitive bidding process. Competition is what helps lower the price. But instead, things are going the other way. Six Sigma asks, so why are the stock markets doing so well? China is up big time. I think a lot of the Chinese stock market rally is mostly due to the fact that a lot of people in China are worried about an upcoming RMB devaluation. So I think the people in China who cannot actually get their money out of the country, and maybe China has had a lot of capital controls for a long time, but maybe they've cracked down more. And so it's maybe tougher now to get money out of China to buy real estate outside of China, like in the United States or other countries. Also, if you're a Chinese citizen buying real estate now in Vancouver and Toronto, especially Vancouver, is no longer good financially because there is an empty house tax. So I think there is money, there is Chinese money, and the Chinese are still printing a lot of money, although some of their money and credit amounts have slowed down a little bit, but I expect them to ramp back up. But I think a lot of that savings in China was actually parked in the stock market to hedge against a future RMB devaluation, because the RMB to the dollar exchange ratio is not at 7 yet. but a lot of experts, including Kyle Bass and others, expect that to eventually happen. So I don't think the Chinese stock market is going up for fundamental reasons. In fact, a lot of the economic data, I don't know how real it is, but the economic data that is coming out of China is not good. It's actually getting worse. So normally, when the economic data in a country is getting worse, that doesn't mean the stock market goes up. So it has to be some other reason, either inflation, currency devaluation, or some other type of reason, or plunge protection team, market manipulation by the government directly or central bank. So I think in the United States, I think there would be even more of a revolt on negative interest rates. So I think there's so many retirees here that if they did try to impose negative interest rates here on a lot of bank accounts in the United States, I think there would be a revolt. There's just too many retirees who need income here that would start to really complain. They would have to figure out a new way to lie or brainwash people to sell this thing. Because if they just announce that, if you put money here into the bank and we're going to charge you a high interest rate to keep your money here, there'd be a lot of pissed people. Well, if you account for a real inflation rate, then yes, everywhere is negative interest rates, but no one's counting a real inflation rate. Which is why I think a lot of these governments want to go into the cashless society and they want to go to a government crypto, because then once they ban cash and they go to a government crypto, they can automatically put a VAT tax on, all these transactions. If you buy something, so if you pay with your government crypto, and on your smartphone at a store or a restaurant, the VAT tax is automatically taken out. Taxes are automatically taken out. If they want to if you park cash, and I'm using air quotes then, in a cashless society with a government crypto at the bank, they can automatically take out the interest rate they're charging you to keep the cash there. And this is this is draconian, it's totalitarian, it's authoritarian. And this is a lot of the people in power. Most people don't realize this. Even a lot of the rich people are really champagne socialists, and they like the Chinese model with the social credit score. And from what I hear, cash is not super common in China, that there's a lot of people who pay with smartphones in China already, more than a lot of other countries. Zathros, and you can't live without a bank, you need an account to pay your bills. Exactly. So if I continued in a scenario like that with like a similar Chinese social credit score system, if I did a podcast like this and the government didn't like what I said, they could, without a warning, they could just shut off my bank account and my credit cards, and then I wouldn't be able to buy any food. So I hope I'm wrong, but that looks where things are heading, and it's a question of when and not if. And that a lot of these economic and political elites in the U.S., these rich champagne socialists in the U.S. and Europe, they like what China is doing to their own citizens. RR says in Europe, many keep cash in their homes out of the banks. Well, that works until the euro gets destroyed. And also, from what I've heard, over 40% of the European Union economy is black market. So there's a lot of people. It's the underground economy. There's a lot of people working off the books. There's a lot because of the immigrants and the other stuff. From what I've heard now, there's also a lot of people working off the books here in the U.S. because of the student loan debt. So there's a lot of people that have like just an unpayable amount of student loan debt, and that they're working entirely off the books in cash. I don't have a percentage for you, but I've heard anecdotal stories of like people just graduated college and the only jobs they could find are like babysitters and other stuff, and that they're taking all cash. They demanding all cash and they don't put it in the bank. Basel 3? Well, the gold community is pumping up Basel 3, saying it's the game changer and it means that gold's going to go a lot higher. Anytime the gold community pumps something like that, I'm very skeptical at this point. But gold will have to go higher because from a supply-demand perspective, the miners are still in trouble. And the oil prices have not crashed anymore. So the miners' costs are not going to be able to be lowered. So if we're going to maintain production levels of this amount of gold per year, this amount of copper per year, this amount of silver per year, then it's not going to be possible to cut the cost much more. There's no panacea out there, a new piece of technology that the miners can all implement that's going to lower their costs another 20 or 30%. It's just not there. Okay, well, we're at 55 minutes now. I didn't plan on doing this for an hour, so I think this is enough for today. I'm sure some of you are tired of me rambling for today, and just everyone have a good weekend. And there's the if you're here in the United States and like college basketball, there's the NCAA tournament. But, you know, I don't like watching a bunch of college basketball too much anymore. I mean, I filled out some brackets, but at this point, doing all that stuff and paying a ton of attention to all these sports is just not really too much fun anymore. But I have been listening to old archived episodes of the Tom Leykis show. The guy from Southern California, that guy is funny. Oh man. He is so politically incorrect, that guy. I don't think there's any way that he could do a public radio show now with the climate that the US is in, especially California. I don't think he could get away with doing a show like that anymore on public radio. Okay, well, without me going into any more jokes or details about that, everyone have a nice weekend, and that's it for now. Okay, bye.